Hello and a warm welcome, and I mean that because it is very warm in Frankfurt, from the Main Tower, the seat of Helaba, where we now have our usual quarterly update in primary markets for the Euro benchmarks. And today, I'm Thomas Kors, heading the financial institutions business here. Today, I am with Alexander Kirsch from our syndicate, because Matthias Mems is on holidays. So, well, looking back at the first half of the year, I can say it has been difficult at times. We had a lot of black swans coming from the White House mostly, the odd war starting and adding to the existing ones that we already had. But the markets seem to have reacted very constructively in any case. More than half a trillion of euros, i.e. more than 500 billion euros being issued in the first half. That's a pretty high number, and I believe it's a record as well. And also another record in June this year, we had the highest volume of covered bonds in Euro benchmark format being issued since the year 2014. Enough of detail from my side. We have Alex here with a number of slides to give us a bit more of an insight into the individual segments. Let's start with Euro covered bonds. Alex, please.
Thank you, Thomas. Yeah, as you said, 20% of the total issuance came from the covered bond market. As you can see, it's a little bit more than 100 billion. And the red line is showing the issuance activities since January this year. You see that between April and June, July had been the most active ones, so that we are pretty confident, or let's say very, very satisfied with the development of the covered bond supply here to date.
And we're moving sort of in between the last 5 years as far as volumes are concerned. But what about the individual parameters?
Yeah, the individual parameters, we are slightly below the volume of last year, but I have to say the good news are that issuers printed a little bit cheaper than last year. The new issue premium, which was in the first half of 24 at 2.7 basis points, decreased to 1.1. So this is a pretty good success. And finally, as what you can also see in the green and also in the red color, there was a movement from 7 years to 5 years. So the sweet spot changed a little bit to shorter maturities since last year.
From what I gather, the 5-year has been pretty much the sweet spot for most issuance in the high-grade sector, apart from SSAs, right?
Absolutely. We will see this later on. Yeah.
Okay, let's go to senior.
Senior. The senior market was even stronger, relatively seen. So we are slightly below the year 2021, but we are pretty strong, and we issued close to 60 billion since beginning of this year in the senior market, senior preferred market, I have to say.
And parameters different to covers?
Yes, they are. The volume...
but the 5 years again, sweet spot.
Absolutely. The volume increased. There was also sweet spot 5 years. And it was a little bit more mixed in 2024. You can see this on these colors, that it was a little bit more balanced between 3 and 10s. But, and these are also some facts, that the new issue premium stayed more or less the same, slightly higher. But you can also see what's interesting to see is the ESG percentage. So the green transactions, they are in the area of 25%. So a quarter of the transactions have been green. More
than twice what they are in covers, right?
Yeah,
but I mean, this new issue premium probably is also evidence of the fact that the asset class has become very expensive. So at least people want to see a bit of a new issuance premium, even though I find 3 basis points not really great. But this is even more pronounced in non-pref, right?
Now, the non-pref market is the strongest of all.
A record year, it seems.
Yes, it is.
So far,
so far it's the highest since 2020. And it's in the numbers, it's 85 billion since beginning of this year, and it was mainly driven by the very attractive funding spread issuers can get in this instrument, and secondly, there are still a lot of issuers which are looking for MREL instruments, but also for instruments which give them support in the LGF model for Moody's to support their ratings.
And of course, it has hardly ever been cheaper for issuers to fund in the senior unsecured markets than it is right now, right?
Yeah, this is correct. The non-preferred market is pretty new in some countries, also in let's say in France and Germany, but the market is it's a higher, better product. So investors are still in the risk on mode, and therefore there was a strong focus on non-preferred.
Let's look at the parameters.
Yeah, the parameters are a little bit different. The sweet spot is not 5 years.
Oh, but
the
new issue premiums have halved.
They have halved. It was pretty high in 24. The reason for this is that we had been on a totally different level than where we have been right now. So there was a little bit more uncertainty regarding the new product of non-preferred. So the premium, the new issue premium halved. So it's almost half of it since last year. But the average maturity is a little bit higher. It's 6.5 years, not 5 years, like with the senior preferred and the covered.
So not everything the same. That's good to know. Now to the star performer, to the SSA market. How did that develop?
I think it's not a surprise that we are on a very high level. Close to 280 billion issue volume since beginning of this year.
And rising.
And we are very close to a new all-time high. This is definitely also driven by the e-names from Europe, but also to the, everybody is listening to the huge issue volume in the SSA market for several purposes.
Yeah, but demand seems also to remain strong. I mean, if you look at this, the new issue premiums have virtually disappeared by that chart, at least. Yeah. Is that part of the famous flight from US assets into Europe, and Europe the new growth market, the new safe haven?
Yeah, it is. A huge factor is that a lot of investors are coming from the dollar market to the euro market. And there is also still a tendency to go into the SSA market for regulatory purposes, reasons. So it's still a strong market. They are very attractive for a lot of investors, and therefore we see the trend going on also over the next weeks.
Even though spreads are not as interesting anymore, as one should expect that with all the new debt that comes from Europe, spreads should rise, right? But at the moment, that doesn't seem to be the case. So let's look at the different spread curves.
This is what happened since January 2025. And you also see almost in the middle and end of April, when Mr. Trump was talking about the Liberation Day. This is the day where he announced all the tariffs globally. Spreads widened, especially in credit products. Senior preferred and non-preferred on this chart is seen as the most widening spreads by 20-25 basis points. But since then, the instruments tightened in by 40 basis points in the non-preferred market and 30-35 basis points in the senior preferred market. And interesting to see is that the covered bond market, but also the SSA market, which is called the rates market, is more or less unaffected from the announcement of Mr. Trump. So it's a quite not a volatile product in these markets.
As one should expect.
It's a good news.
So as Mr. Trump would have Twittered or X'd these days, fantastic buying opportunity on Liberation Day for senior unsecured. And no risk and no losses in the covers and the SSAs. So great for that. So, but there's another spread curve that we tend to look at, which is the bond swap spread. So that has been showing some historic developments recently. So let's look at that a little bit more in detail, please.
Yeah, Thomas, when we talked about the bond swap spreads in the past, we were always talking about spreads over so wider swaps than bonds. This has changed middle of the year. It turned into the red area. So in other words, spread products became more expensive to governments. But as we have seen in previous slides, the rates market was more or less not really affected. But on a relative value basis, covered bonds become more expensive against seniors. But it seems to be that we find a new equilibrium for the bond swap spread around zero. It's sometimes a little bit above, sometimes a little bit below, but it's always around the zero value, I have to say, on the bond swap spread.
So do you think that's going to be the new normal situation, bond swap spread around zero?
I would say for the next weeks or months, I would say yes, but hopefully we are turning back to the green area earlier or later.
Well, we'll see what the future will bring. And speaking of that, what do you think are the main drivers of volatility going forward for the rest of the year?
In general, we see the positive market environment still continuing in the second half. But as you correctly said, there are some headline risks which can pop up all the time. And I would say the main drivers are the ongoing tariff discussions. They are not finalized yet, so they are always good for surprises. And the war, which takes place in the Ukraine and Middle East, hopefully it's not escalating. This can also give some pressure on spreads. And finally, the money market or the monetary policy decisions from the Fed and the ECB can also be good for surprises in lowering rates or even increasing rates, what we do not see, but it is a risk which we have to be aware of. And finally, increasing insolvencies turned up as a new risk factor. I have to say we are a little bit in a downturn, in a weaker environment. So increasing insolvency can increase also the credit risk and can put some pressure on
in Europe.
In Europe.
Well, I hope at least that all the money that the European governments intend to spend over the next 10 years or so in order to beef up infrastructure and beef up armaments will have some effect on growth as well. So maybe in our next quarterly update or the one after, that little entry, insolvencies, will not be as prominent there anymore. I'm afraid the war ones may still be with us a little bit, but we'll see about that anyway. So what we do know, because all of this we don't know 100%, we don't know it's going to remain exciting with the persons governing the White House, the one person really, and we know that the summer is here. We see fewer issues, we see fewer turnover, and we see a lot of people actually moving out of town to enjoy a summer break, and I hope you do that as well. In this context, thank you very much for staying with us and watching this. I hope you have a relaxing summer, and we'll see you back at our next update after the summer break, where we hopefully have a fantastic start into an exciting last quarter of the year for all the asset classes we just discussed. Thank you very much to Alex for giving us the detailed view. Thank you. This is Thomas Kors from Helaba. We wish you a very nice summer.